I like to start off each show with a summary of what I saw happening in the stock market this week. And so we'll start with the chart that we've been looking at for several years here. You can see, what's been going on. Really strong stock market
Hmm.
right now. We hit what 54, 55, 56 all-time high. I think all of those happened this week.
Yeah, Bitcoin finally broke that six-digit barrier.
Yeah, Bitcoin's going crazy. The market is very strong and continues to be strong. And lots of momentum. The primary direction is certainly up, and there's a lot of reasons the market's up. And so we're going to talk about those. And it's been a long time, but I have used to do a thing called Positive Friday. And the object behind this entire channel and this whole show is really the genesis for why it started. If you look at that big drop during the pandemic, at the very bottom there is when the show started on the 23rd of March 2000. And at that time, I was just trying to point out what was positive that was happening, because it
Hmm.
was a pretty dark time with the pandemic. The market dropped 35%, fastest 35% drop in history. And my objective was to say, okay, look, we can all see the negative. It comes out, it's in the press, it's what sells, it's everywhere. But it's sometimes difficult to see the positive. And to be a good investor, you need to have both sets of information so that you can have a balanced approach. Sometimes the negative does outweigh the positive, and you should be nervous or out of the market or whatever it is that you want to do with that information. But a lot of times they think you can't be a really good investor unless you have that balance of information. So that's what we're trying to do in this show is do this, kind of positive pieces. And so I'm going to switch back to just the two-person here so we can just talk about this. And Ethan and I can brainstorm kind of all the positive things that we see out there. Now, you have to keep in mind that some of these things that are positive for the stock market
Hmm.
may not be positive overall. Okay, so for example, reducing regulations. Okay, uh, that's good for the stock market. I mean, it reduces the costs, right? I just read an article saying that $90,000 is the average cost of regulations for a home.
Hmm.
So if you got rid of that, homes would be cheaper. Construction companies might do better, right? But is this better for the environment? Is it better for the workers that are working
Or
in
the actual
these,
consumer too.
or even the actual consumer? Exactly right. Probably not. But this is one of the platform pieces that they're talking about. And so, again, looking at it from the stock market standpoint, which is what I'm trying to do here, I'm trying to point out, where these things can be positives. 'Cause people keep asking me, with all these negative things that are happening, or all these negative things that are being brought up as possible platform issues for next year with the new administration, why is the stock market hitting all-time highs over and over again? And here's why. Okay, we're going to go through this list. Okay, so first of all, the one thing that's happening right now is the stock market's broadening out, and this happens before the election started.
Hmm.
We had this Magnificent Seven kind of narrow run, and you will see that Magnificent Seven do well when things are a little bit murky because their cash flow and their cash positions, their name recognition is unparalleled. That's why they're so big. We're seeing a little bit of run in them right now. Again, kind of went away for the summer, but again, I think that's partly because there's some, worrying about what might happen next year. But if you look past that, we're seeing small caps do well.
Yeah, it's been a while. Over
Yeah,
the summer, we had a small cap run, and then it
right.
kind of fell back down.
Yeah, and they're running again, right? I mean, not a bad year. I think small caps are up 20%. They're not up as much as the S&P 500, but
Hmm.
that could change next year. We're seeing mid caps do well. We're seeing the equal weight S&P 500 outperform the capital weight.
Hmm.
So basically means that the small and mid cap companies in the S&P 500 have an equal say in the price movement, and so that just means that we're seeing some broadening. It's one thing we watch for all the time. The primary direction's up, right? I mean, we just looked at that chart. There's no doubt whatsoever. Primary direction is up, and that hasn't changed for 2 years, okay? And so what's important about that is that the average primary direction up, otherwise known as a bull market run, is 5 years, okay? So 5 years long. We're 2 years into the 5 years.
Yeah,
So
so a little less than halfway.
yeah, so on average, we have more room to run. Okay, if we look at the returns in that 2 years, roughly 70% so far since the bottom in October 13th, 2022, and the average return on a bull market is 180%. So again, on an average basis, we have some room to run. The economy's strong. Yeah, I mean, gross domestic product keeps coming out in that kind of 3% annualized range.
Hmm.
It's doing quite well. It even got revised up this year for one of the quarters, which is kind of nice. Consumer spending continues to do well. I think there's a lot of pieces there. You know, kind of had that pent up demand,
Yep.
and people wanted to get out and do things. It's still going, right? People are still traveling. There's lots of travel plans. And wages, today's jobs report showed that wages grew 0.4% for the month and 4% higher than last year.
Yeah, and that's outpacing inflation.
Yeah.
And
Yeah.
so over time, people are getting more money,
Yeah.
essentially.
And you combine that with a healthy job market because the job number came out today at 227,000 jobs
And I think
created.
they had 56,000 to the previous 2 months,
Yeah.
too.
So it's kind of nice to have an upward revision because they had a downward revision for the first half of the year. But yeah, so we up revised the last 2 months by 56,000 jobs. Plus we had 227 today. The expectation was 220, so it met the expectation, which is good because we've had a couple of that fell below. And so that's a healthy consumer, right? They have jobs. Unemployment did tick up one
Yeah,
tick, right?
it's up to 4.2 versus
4.2. So as a whole, the job market is, I wouldn't say it's spectacular, but it's good, right? It's especially for what it needs to be for the stock market as far as that goes. Of course, we have robust earnings growth. I mean, quarter after quarter after quarter, 75+% of the companies beat their expectations for reporting on earnings. So the analysts expect this, companies do something better, right? And I think that's happened 10, 11 quarters in a row now, where there's been at least 75% or higher. That's not normal. That's a really good run, actually. And so if you have 2 years in the S&P 500 where you have 20% or more in those 2 years in a row, which we've just done, well, we're not done yet, but looks like we should get
it's
there.
close.
Then you end up with a scenario where the third year on average is positive, okay? And so again, that's not an expectation that a lot of people have right now when they're worrying about the market, but on average, the third year after these 2 big years is positive. Now, that could be 1% or something along those lines, but still it's better than negative. The valuation of the market right now is high, but it's nowhere near the peaks that we've seen before things really started
Yeah,
to
like
turn
the
down.
01 or the .com
The
peak.
.com peak is a 45 PE. We're nowhere close to that as far as that goes. I think the other part of that is looking at the breakdown of how a bull market plays out, right? So you kind of have this solid start, which is definitely what we've had, real companies, real earnings, the
Yep.
NVIDIAs of the world making money. And then we'll start the IPO things. I think that starts next year, gets a little hotter and gets exciting and money starts coming in. The problem with IPOs is that they actually start flooding the market with more shares, right? And right now, the dynamic that's really happening is no IPOs and companies are buying back their shares, okay? So that's still probably going to continue to be the dominant story for at least the first half of next year. But IPOs will start. IPOs, when they first get going, to bring enough excitement to get everything to rise.
Yeah, and usually the IPOs at the beginning are very solid companies
Yes,
that have
that's
been
right.
waiting for the right time.
Yeah. And that's the next step of that kind of culmination of a bull market is when those IPOs get to be really ridiculous. Bingo.com is my favorite story about the .com bubble as far as that goes, and the SPACs that happened at the end of the 21 time frame. So we'll be watching for those. We'll be talking about that. Wow, that doesn't make sense. There's always something that doesn't make sense, but it becomes much bigger. It becomes actually the story as far as that goes. So we're pretty far back in that lineage of how a bull market works, right? We don't have a lot of those other things in place that would say, hey, this is really out there. We need to really be careful. We're still in the middle innings of what would be a bull market as far as that goes. So lower corporate taxes. So the talk on the campaign trail was to bring corporate taxes down to 15%.
Yeah, for U.S. companies.
For U.S. companies. That's a huge deal. I didn't hear any talk about bringing Janet Yellen has been working on a 15% tax rate worldwide.
Yeah.
And that, for some reason, that stopped. There was a lot of traction on that. The advantage to the U.S. there is unbelievable because you got big U.S. companies running money through Ireland because they have a 6% rate, who might now run their money through the U.S. because the rate's still the same everywhere. That needs all of the major countries that you would run money through are at 15%. So that might fit in. We'll see what happens there. I find that quite exciting as a whole. It could be a really big deal. We talked about lower regulations. That stimulates the economy, that stimulates the stock market. It makes earnings better. Reducing the cost to run government is part of the platform, right? Any of these can be taken too far.
Yeah.
You reduce it enough, you actually take away money that is going into the economy. But there's always, every company and certainly every government agency has some, inefficiencies.
Yeah,
Right?
and you usually see in downturns where those inefficiencies, like
Yeah.
companies always have layoffs,
Yeah.
and usually it's the most inefficient employees that are laid off.
Yeah, exactly. So we'll see how that plays out. But at the moment, that could be a positive also. Uh, uh, for Trump himself, he uses the stock market as a scorecard. I think that's important as an investor in the stock market, that he really looks at that. He pays attention to that. I felt like in 2018 when he was doing the tariffs, stock market was dropping. He backed off on the tariffs, and the market finally came back. They're still out there. It's not that they took them away, but he stopped doing additional tariffs at that time. So, he had a 67% rate of return on the S&P 500 during his first term, even with all the chaos that happened from the pandemic, the January 6th, riot at the Capitol. Stock market did pretty well under his term, at least partly because they lowered the capital gains. Lowered the corporate tax rate.
Yeah, and they also lowered just the tax brackets too.
Yeah. Okay. So again, good and bad, right? You lower tax brackets, you increase the deficit, but until the country goes broke, that's stimulative to the stock market. That's just the way it is. So if you're looking at the next 2 to 3 or 4 or 5 years, and tax cuts would be incredibly important, both on the personal side. So, I mean, they're talking about some really big deals. Number one is keeping the 2017 tax, cut in place, maybe permanently. I did read an article today saying that if it would have gone back and sunset back to where they were, that would have been the largest tax increase in history. So possible, keep it, right? All these are possibilities, by the way. The Social Security tax, taking that away, taxes on tips, taking that away, repealing the SALT, where you have a $10,000 cap, right? Yeah. So if you get to write off your full property tax plus all of your state tax, I have more money to spend, to invest, to stimulate the economy, correct? So if I don't have to pay taxes on Social Security, right, that's money that's going to come back into the economy. That's all stimulative. The stock market, this is why we're hitting all-time highs. I'm telling you, this list is why we're hitting all-time highs. The Treasury Secretary that was announced is Scott Bessent, and he was very well received, actually. He's considered at least the adult in the room. I find it kind of interesting. If you look at a lot of the cabinet picks, seems to want to really mess with the FBI, the CIA, the health department, the education department, all of
they're pretty radically different philosophies.
People that don't even like these organizations are going to be running them. But all of a sudden, when you got to the financial thing, boom, we bring in an established Wall Street likes this guy. So again, I think this administration does, at least in this case, look at those kind of economic positions and the economy as a whole and the stock market as a whole as a scorecard. So I think that, again, I think that's a positive. The market went up when they announced him as the thing. Capital spending is up. So companies are spending on, different devices and what have you. Artificial intelligence is here. Trump has talked about it, seems to be favorable to it. That's good for utility companies because these artificial intelligence centers take massive energy, right?
Yeah, I was hearing something about Meta wanting 1 to 4 gigawatts of more power for their data centers.
Wow. So we're seeing utilities run. This is good for financial firms because financial firms are very heavily regulated, right? So there's some pockets that we're seeing running as far as that goes, right? Estate taxes, if they continue the current tax brackets and all that, they would likely also continue the current estate tax benefit. So, it's going to be, I think, about $14 million per person if you have a trust, and you can kind of do it too. That could go through without taxes versus going back down to maybe 7 or 6 million, depending on how they ended up doing that. If they let that sunset, as far as that goes. So again, I think could be stimulative. Taxes coming out of the economy are not good for the stock market in the end. Sometimes it comes back in as government spending, right? But it doesn't all make it back in. The step up in cost basis is likely to stay in place. Okay, so I don't know. This is maybe not directly related to the stock market growth, but when the Democrats had, and I'm not trying to be political here, but this did come up. There was conversations when the Democrats had the House, Senate, and the White House about the possibility of getting rid of the step up in cost basis. So what happens is you buy a stock and you hold on to it for your whole life, and it's grown dramatically. And you got this huge gain, and you pass away. Your heirs can sell it now with this step up basis to current value, and that wipes out that whole taxable gain. I think that's probably the biggest tax benefit in the investing world that I can think of. It got dropped. It didn't happen. It wasn't real serious, but it's not something you're going to see out of this administration. So I think that's, again, could be a positive. The last 9 times that we had a positive day, the day after an election, the market was up every time. At 12 months later, an average of 9.5%. So we had a 2.5% jump the day after the election this time. So again, looking at averages, not bad. And here's maybe the most obvious one: the Fed is lowering rates. We're not raising rates. Who knows what will happen next year? But there's still, I think it's at about a 75% chance, at least as far as the market's concerned, that they would lower rates next meeting, which is the 18th of December.
A couple weeks.
Yep. And so the stock market loves lowering rate environment. And we talked about all those stats in the past as such too. So anything else you can think of?
No, it's a long list of actual net positive or
It
positive
is, and
things.
so that's what I mean. I bet you the average investor would have a harder time finding all the positives than the negatives. So that's why we're here. We're going to try to keep doing this and keep pushing this out here, just to give people a balanced approach. Now, do we think the market's going to skyrocket? I think this is going to be the most unpredictable year of 2025, just because of what was said on the campaign trail. And what might actually happen. It's just deporting all of the immigrants in the country that are here illegally, would be devastating in my opinion to the agriculture and construction industries, and so I'd be surprised if some of these things really happen, but you got to take it into account that it's possible. So yeah. However, if I'm only focused on that, I'm only focused on tariffs and what they're going to do to prices and those types of things, I might be making the wrong decisions on my investments, right? If I understand all of those negatives, which are thrown at me every day, easy to do. We could sit here and brainstorm negatives like nothing, and it wouldn't even be new news to anybody. Versus, hey, here's the list of positives that's happening right now. It's pretty strong. It really is. I mean, this is a pretty strong market. And that's one of the things that all of those negatives are going to have less impact, because the market's not in a position of weakness, it's in a position of strength. And so it could still have an impact, but it would be less. If we were teetering on the edge of 2022 when everything was kind of falling apart, or 2008, and we were talking about doing all these things into the teeth of it, Lehman Brothers going out of business, yeah, you would have, it wouldn't take a lot of negative to kick that even farther down. And so anyway, that's the summary for the week. Positive Friday seems like a good time to do it. We only have one more show this year, getting ready for next year. And there's been a lot of concerns about what, and a lot of questions about what might happen with the new administration and how that might impact my account. Honestly, we don't know, but here's the list of positives for you to look at and think about too, as far as that goes. So thank you for joining us. Again, we'll be here again next week and we'll do another summary.